The main driver of all of this is liquidity. Liquidity drives all financial markets. Liquidity, for the definition here, would be the kind of ease of which money flows around the system. And I can use money supply growth, M2 growth globally. And obviously with the central banks all jacking up rates and shrinking their balance sheets, what they're actually saying to you is, we want to take liquidity out so you guys can't do as much speculation. Now, what that means is things like your credit card rate goes up, your mortgage rate goes up, you've got less money to spend on stuff. So liquidity, your liquidity, has been taken out of your pocket. And it's the same for everybody, particularly because there's so much debt in the system. However, our job is not to live in the present. Our job is to live in the future. And we need to understand where the future lies. So I think the market's discounted this already mainly, and that the low potentially is in, because what will be happening in 12 months' time? In 12 months' time, we will have seen a recession and we will likely be coming out of it. Whether we're fully out of it or not, doesn't matter. A recession at some point in the future means that the Federal Reserve will stop hiking and will stop shrinking the balance sheet. And they will probably go towards cutting. In the future, in 12 months' time, the probability of inflation being, at 8% is extremely low because of the year-on-year computational differences and the fact that oil, copper, freight rates, everything has come down massively. So I'm thinking that there is a probability that inflation goes negative within 18 months. So if we look out 12 months, the recession is behind us, rates are lower, and inflation is low. Okay, so that is a very good outcome for risk assets and crypto. Crypto bottomed in June. We had the retest. Bitcoin had a retest only 2 days ago, and I think it was the retest. So my DMARC indicators, which I use mainly for my technical analysis, gave me that signal. ETH had a much stronger signal in June, and I started finding as much money as I could under the sofa anywhere to start investing, adding to my positions. I never sold anything. So I'm thinking the markets are forward-looking. I think the sentiment is extremely bearish, and we're going into a potential change in the macro. Does it happen this month, next month? Don't really care. Then we've got the ETH merge, which we all know about. I don't think it brings fireworks. Maybe it does. Maybe there's a big sell-off after it, big sell-off beforehand. I don't really know. And again, I don't really care. What I do know is that post-merge, a few things happen. There are no miners to sell every day. That's about 6 billion that just disappears from selling each month. Okay, so that's a difference. Then we've got the reduction in supply, but that's really driven by the increase in network activity. So we need to kind of see the network go up a lot for that to really kick in, it become deflationary, but it's less inflationary. So there's less ETH around, but then we've got this magic. The magic is you've just introduced yield into the ETH ecosystem in a secure way. Where ETH is this very important asset, it's still going to have problems. It's still going to be expensive, and it's still going to be slow. So as adoption keeps building, a lot of adoption spills outside of the ETH into the Solana, Avalanche, and a bunch of other protocols as well. So I think we're going to see ETH lead the charge, and then we'll see this tail of stuff starting to come as we start a new bull market. And generally things work that way. So I think a lot of these layer ones this time around will be like ETH in the last cycle. They'll end up becoming very large dominant change. Which ones? Yeah. Don't really know. My bet's really on Solana, but it could be any of these, and I'm kind of indifferent right now. Solana's, as I said, I got more allocated towards that than I have to some of the others, but I'm watching them and waiting to see. I've had also technically a perfect monthly, daily, weekly DMARC setup in the Solana ETH cross. Now, I'm not yet ready to make the bet that I would switch my ETH into Solana, but I have some. But I'm observing that to say, let's see if that plays out, because that will be a narrative that people don't really expect. And I'm not saying that Solana becomes bigger than ETH or anything of that sort. I'm just saying, could it outperform in this cycle? The way that I form an opinion, and everybody should, is you listen to a lot of broad-based opinions. Sure, you can take the crackpots off from either side, but listen to a broad base of opinions. Like there's some really interesting opinions on why the ETH merge might be a mistake. You don't ignore them. You take them on board. And then you weight them yourself. How important is that to me? Not sure, very important. This is terrifying. I don't really care. That's okay. But having people's opposite opinions, differences, nuances, it's really important with the macro scenario. Just because I tell you what I think doesn't mean I'm right. But once you listen to a bunch of people, you can start formulating your own opinion, saying, this is what makes the most sense versus what I'm seeing and thinking, and therefore I can have these set of outcomes and actions. That's what Real Vision is really all about. Most other podcasts are one show host. And so you're getting one person's opinion. We're not that at all. We are the conduit for learning. We've even started in many of the videos now to even give the key takeaways, explain what you're going to get out of the video, to simplify them. And you do a great job of simplifying stuff as we go, because people are at different levels in their understanding. The actual thinking is, if there were to be a recession for 3 years, what are the central banks doing? Right? Because that's unemployment rising for 3 years and inflation falling for 3 years. What would the central banks be doing? They would be trying to stimulate as much as possible, because we have not had a 4-year recession in, as long as, I think, not even the 30s. I don't think it was that long. But let's assume it's the 1930s again. That is incredibly positive crypto, because there's a massive debasement of currency having to happen to try and protect the world falling apart because of the debt burden. So, again, it's not about are we in recession? It is, what is the outcome as growth slows? What happens to liquidity on a forward-looking basis?